welcome to this event. 3 rules to follow, 3 rules to break. Among you, there will be people who like to play by the book, as well as some rebels. So we hope that this team, we can serve you both. Now, before we start talking about Emata, a few words for why we're hosting this event in the first place. We're hosting this event to share a few lessons with you on our journey . What FSDU does, but I think nobody can do that better than the CEO of FSDU herself. So Rashmi Pillai, if I may invite you.
Very kind words. Hello everyone. There are an incredibly lot of people in the back. Is there a reason for that? Are you determined that you're going to be bored to death? And therefore decided to position yourselves accurately. But again, thank you for making it to the event. It's 4 o'clock and the last thing you want to hear is a very heavy presentation. But, we'll try to keep it light and interesting. Thank you, Bram, for having us here. It's raining? Yeah. Okay. So you can't hear me, and I'm going to give when it rains. That's what I've been told. Okay. Do you have a clicker? How do I use? Before we go into FSDU, how many people here know about us? Show of hands. Okay, not bad. We could have done better, but okay. As Bram says, FSDU stands for Financial Sector Deepening Uganda. We are a Ugandan company, not-for-profit, funded by the Bill and Melinda Gates Foundation and UK Aid. We are a total of 4 years old in terms of legal entity. We exist for one mission, which is how to build competitive financial markets that are inclusive of everyone, especially vulnerable groups that you see below, like women, small and medium enterprises, refugees, smallholder farmers, which is what Emata will talk about, youth, and also give customers choice and empower them. And our theory of change and belief is that there are 2 ways of achieving this. We can help businesses and be more prepared for the economic shocks they face. So how do we empower them with greater insurance, savings, credit? Or we can give them additional opportunity pathways, which is through owning assets and enabling them to take home greater income and therefore reduce poverty. We are, as Brad mentioned, of a larger network. It's called the FSD network. We are present in, so you'll find an FSD Tanzania, you'll find an FSD Kenya, you'll find one in Rwanda. So we're present in a total of 10 African countries. What is different is that when you have FSD Africa at the bottom, it's not a region and country relationship. Each of these entities are independent entities. We have their own governance structure, own funding model, but we're all bound together by a common vision of inclusive financial markets. So what are we trying to achieve? And how do we fit into this conversation? So the bar graph on your extreme left is a study that FSDU conducts periodically with the Ministry of Finance and Bank of Uganda called FinSco. It's a demand-side study, and it tells the state of financial inclusion in Uganda. And you will see that 58% of the adult population in the country have access to formal financial services. Can you still hear me?
Yes.
So the contrast. Okay. All right, I'll try something new. So most of them, financial inclusion came from one area, payments. So if you see this graph on the right, you will notice that 89% of the people who are formally included are using mobile money or some kind of remittance service, and therefore they are considered to be financially included. But if you dig deeper and try to understand whether they truly have access to formal credit, access to formal insurance, or any other kind of financial instrument, then you will see the numbers are in single digits. So there's a big difference in terms of the depth of financial inclusion versus access in the country. So how do we operate? So FSD Uganda's model is very different. We are not here to duplicate resources or try to be, since we are among friends, shadow government. We are here to understand why are there inefficiencies in the system. Is it an enabling environment problem? Is it a so within that is it a regulation problem? Is it a problem because the actors don't understand each other? For example, you will hear Graham talk about smallholder agricultural credit, and it could be simply because of a market failure, which is information asymmetry. Banks just don't understand how to assess credit worthiness of smallholder farmers. That doesn't mean they are incapable or should not be served. In fact, they pay higher interest rates than people like you and me because they borrow from money lenders. So it's a question of how do you look at the market, how do you look at the supply side, the demand side, the enabling environment, and figure out the right kind of operating model to fix and address systemic change. So how do we operate? We have three big departments. Big is relative, but big in terms of the work we do. Business environment. So here we work, to give you examples, we work with ministries, we work with all regulators like Uganda Communications Commission, the Bank of Uganda, Insurance Regulator, Capital Markets Authority. We have MOUs with them. We are helping all of these regulators become more savvy in terms of next generation regulation, compliance, and supervision. This is a 3-year journey that we've embarked on the 4 financial sector regulators. We've also embarked on a journey with the Ministry of Finance when it comes to digital financial services. We have enabled the strategy of the Uganda Microfinance Regulatory Authority, and we're enabling and capacity building them. In addition to that, we also support meso institutions like fintech associations, Uganda Bankers Association, or the Insurers Association, because we don't believe, or our belief is that these associations, if capacitated well, can actually drive better policy. They are supposed to represent their constituents, not just as a lobbying unit, but also to educate policymakers and demand change that they would like to see across the industry. The next one, access and usage. You have Juliet here from, raise your hand, so people know you. So Juliet heads the access and usage pillar within FSD Uganda, and our partnership with Laboremus falls under there. Here we ask ourselves the question, well, we looked under the hood, and there are very few people who have formal credit in this country, formal insurance. What are the reasons? What are the bottlenecks for those? Is it a product design issue? Is it a service delivery issue? Is it because, is it a pricing issue, user interface, user experience issue? All of that we then think through and support experiments like Emata and help them grow so that they can address those systemic challenges that exist. So we do that through technical assistance and we do that through grants. All right, so I skipped one. Yes, market infrastructure. So the third department that we have is called market infrastructure. It's a fancy term for just saying how does money move in an economy? How does information flow in an economy? So examples of what we would do here would be, how do you have real-time electronic KYC? Connect the national ID database to your bank account. How do you allow apps to, if you don't want to be tied to your bank account, for example, you're unhappy with the service your bank is providing, but there's another competing bank. How do you enable real-time KYC so you can open that account from the convenience of your own home? It will allow for examples like this to exist. So we do a lot of work in terms of expansion of social protection, national switch, and several other payment architecture-based work in this department. How do we, examples of how we are working across the market. So we enabled the Bank of Uganda set up the National Financial Inclusion Strategy. We're helping the delivery of the strategy. We are the only development partner on the Interinstitutional Financial Sector Development Committee headed by the Governor, Bank of Uganda. We are part of the task force on the fourth industrial revolution and are supporting this, especially in areas of robo-advisory, artificial intelligence, blockchain, and distributed ledger. We are also supporting refugee financing, not doing it ourselves, but enabling and trying to understand how can we create more meaningful financial services for refugees. And the tools that we use, I mentioned already, we can do grants, technical assistance. We do a lot of research, which is available for public consumption. And we do a lot of convening and consultative public and private sector consultations. All right, since its formation, FSD Uganda have directly impacted 500,000 adults in the country. And I will keep to that because I think I'm on a tough time limit. So this is just an example. Most of you have seen me present this. This is an example of digital financial services ecosystem in the country. So you have at the most, let me go back. So at your first level, you will have your transactions, the store of value accounts that exist in the country. You have savings, you have credit, you have all of these apps that are built on those rails. You have insurance, merchant solutions, pay-as-you-go service providers, and the entire ecosystem. We want to enable deepening of these so people are not using wallets.
All right, before we dive into Emata, a few words of introduction from our site. Emata is a spin-off of Laboremus Uganda. And Laboremus Uganda is part of the Laboremus Group, which is a group that specializes in making financial technology solutions for banks in East Africa as well as Europe. Our head office is in Norway, where we have been around for more than 20 years. And in 2013, so about 6 years ago, we set up our office here in Uganda. We like to say that we build banks. And in fact, we have built about 8 banks so far. But I must admit, they're mainly in Europe. So the names that you see here may not be all that familiar. If we're not busy building banks, we are busy digitizing banks. And this is something that we also do here in East Africa, where we help bigger and smaller banks become future ready in terms of the digital technologies. Ever since we started working here, and especially working with banks, we realized that yes, we can help banks be digital, but that will only help those people who actually have a bank account. And as Rashmi aptly explained, that is not exactly the entire population. So from the onset, we started thinking, what is it that we can do with our technologies that also helps people who don't have a bank account? And ultimately, that resulted in Emata. To make my life very easy, we'll show you a brief movie that will introduce Emata. And in case you wonder who the main actor is, yes, he is related to Idris Alba, and yes, he is here.
Agriculture is a cornerstone of most African economies. Most farmers, however, are not able to invest in their farms because they do not fulfill the requirements banks and other financial institutions demand in order to give them loans.
With Emata, we use advanced risk analytics to determine if a farmer qualifies for a loan. We work with dairy cooperatives to create a digital record based on a farmer's deliveries. Using end-to-end digital processes, algorithms, and advanced risk analysis, we offer farmers loans at affordable interest rates.
For a single farmer, Emata can be what secures his or her ability to face healthcare costs. Emata will accelerate the potential of an entire continent by revolutionizing farmer financing.
So, for those of you this went a little bit too fast, don't worry, I'll explain it all before we do a deep dive. Now, as I said, most people don't have a bank account in rural areas or access to financial services, which creates a problem. But what is this problem exactly? The lack of capital and the lack of efficient financial services in rural areas means that effectively, if we look at farmers today, they're paying interest rates between 50 and 100%. This is not only shocking, it is very damaging for a country's economy. Because at these interest rates, loans are last resort rather than a source of investment. And consequently, if you look at the productivity levels of agriculture in Africa today, they are unsurprisingly very low as a result of the low investments. We started our journey with Emata in the milk industry, so most examples here will be given from the milk industry. But if we look at an average cow in East Africa, it will produce about 500 liters of milk per year, whereas the average in, let's say, Europe is per cow per year. And it's not because the grass here is better, in Europe is better, the grass here is equally good. It simply has to do with farm practices and investment. Now, this problem is particularly grave given how many people are actually dependent on agriculture. Agriculture accounts for about 30% of the economy here and employs, directly or indirectly, around 80%. So in terms of financial inclusion, this is a very, very big number. And we thought a problem worth solving. So with Emata, we set out to provide farmers access to loans in a completely different way. We basically use three main pillars to get this done. First of all, we base our lending on data, which means we have to get our hands on data on farmers. Now that is easier said than done, because farmers are exactly digital savvy in Uganda. So rather than digitizing farmers directly, we decided to digitize cooperatives. So working with cooperatives, we can achieve scale much faster. Because rather than digitizing a farmer one by one, we digitize one cooperative and we get data for 300, 400 farmers in one go. Having the data, of course, is only the starting point, because data itself has no value. We have to turn it into something useful. So we set off on a journey to analyze this data into credit limits. So based on data patterns that we get, weather patterns that we get, and advanced analytics, we actually are able to give each farmer a credit limit. And this credit limit obviously differs quite a lot between farmers. Because what most banks do is to just say, okay, you are a farmer, this is what you're going to get. But needless to say, there are big differences between the farmers. So with us, if you're a very good farmer, you get a very high credit limit. If you're a not so good farmer, you can still get a loan. It will just be a smaller loan. Lastly, we have to get these loans to farmers. And one of the issues that traditional banks face is that distribution costs are very high. If you want to build a branch in a village, it's already a very big investment. If a farmer wants to get a loan, he needs to fill in forms, he needs to show title documents, there will be a number of back and forths, and all in all, you can ask yourself, is that all that work worth it for a loan of 100,000 shillings, 200,000 shillings, or 500,000 shillings? This labor-intensive process is very expensive, and one of the reasons why interest rates today are so incredibly high. In a nutshell, Emata does the following things. First of all, as I already explained, we capture data. So at the cooperative level, we have launched a technology that will allow the cooperative to have a database on the farmers, to track delivery patterns, prices, you name it. They can then use that data to actually manage their cooperative. Cooperatives are actually surprisingly fast-growing and interesting businesses. They're just entirely paper-based. So even cooperatives themselves often struggle to make the right investments, right? When should we buy a new milk cooler, for example? Should we set up a new collection center? Is our collection center performing? Should we reach out to certain farmers to help them, deliver more milk to us? These are things they ask themselves, but they don't have the data to actually make proper work out of it, which they can do with Emata. Payments. Especially in the milk sector, payments are a big issue. Farmers get paid every 2 weeks, but today, if a cooperative wants to calculate how much they should pay each farmer, it's fairly international, and many startups in this part of the world tend to follow what other startups in the rest of the world do. And for certain, this is extremely useful. For others, it is less useful because things simply work differently in this part of the world. And that's what we'll be talking about. Don't worry, I won't be the only one talking all the time. I brought with me the co-founder of Emata, Timothy Musoke. Who will be hearing the first. Timothy, the first rule is talk us through it.
Yes, thank you.
getting access to an API to identify positively is still a challenge. Thanks to FSDU, actually, they're trying to help in supporting these APIs available, specifically the national ID database. So this should be soon.
All right, the next rule, a rule you should actually follow. Startup rule, next startup pitfall. Simple, design for your user, but not for yourself. So many founders, they get so in love with their concept that they and every time you have to force yourself to go back to the drawing board and ask yourself the questions. All right, I have this concept. Which features does it really need? Which design should it have so that my users actually like it rather than just me? So that's rule number 2. Work with your users and invest all that time. If you don't, be fast, but you're in for
this new technology. In our research and subsequent pilot, we started off by offering an Android application that we thought cooperatives to use to collect the data and subsequently be able to pay the farmers the money owed to them after the end of a period. After a couple of months piloting, we realized that actually really needed is the good old desktop. Basic numbers. If we were really watching or paying attention the way we should have been during the pilot phase, we should have realized that all this data they were giving us was actually in Excel files. So we should have been asking ourselves, how are they, making these Excel files? But no, we went ahead and gave them an Android application, and later on realized the desktop should have come first. So don't jump onto the big buzzwords like artificial intelligence. First do some house cleaning, get the basics right before you move on to the cooler and more trendy technologies. Now, we're not saying the app is not important. We have since found another
you name them, they have revolutionized tech, but they have also revolutionized industries with a different way of business thinking, which is a very smart thing to do if you're setting out on a journey to make a change. This is one of the farmers with whom we pilot. Maren, what's his name again?
Moses.
Moses, exactly, Moses. So Moses is actually holding our phone and using some of our technologies. Now, how do we make sure as Emata, right, that we earn enough money to keep our lights going on? There were a couple of options we had. Now, we've asked Moses, would you like to pay for this software? Moses said no. We asked the bank, would you like to buy the data that we have on Moses from us? The banks didn't even know what we're talking about. Yet there are companies out there who are doing exactly that. Right? So they may have a good idea, just the way in which they monetize it is the wrong one. Because if you ask Moses, do you want to get a cheaper loan? Moses said, yes, I need a cheaper loan. And not only Moses, Also the cooperative, where Moses is a member, was very happy with that idea. Because if we don't give a cheap loan to Moses, because he's a member of that cooperative, Moses will get that loan somewhere else. And that other person that gives him the loan will take that milk as collateral, which means the cooperative will no longer get the milk. So the message here is, right, think carefully about how you make your money, because if you're good at it, you can kill two birds with one stone. You can make your users happy and solve a problem and earn money, rather than chasing some elusive golden goose that may not be there, even if you run behind it very, very long time. So think carefully about your business model.
Yes, another misconception. For those of you who are in the tech startup scene, you should have heard this quite a lot. There's so many VCs out there just waiting to pour a lot of money in the new startups, the new gold, which is the new startups. Well, I hate to break it to you, this is not the case. VCs, as any sound business or businesses, are interested in good ideas, but most importantly, good ideas that make money, good ideas that are going to generate revenue. As a startup, you only have a good idea, and you're not yet making money. If you're lucky, it's going to take you maybe 2 to 3 years to get to a point where you can actually say, we are starting to make money. And then certain types of VCs will start getting interested in you. So the question becomes, what do you do in the first 2 or 3 years? Yeah, so basically there are other alternative sources of funding that can come in before your good idea gets to that level, say Series A funding. And for Emata, what of course we decided to do is go to those alternative approaches. In this case, FSDU is one of them. And you can see a number of others. This is possible because what we are trying to achieve is actually aligned the goals and objectives of these organizations. So in the first 2 years, we're able to source funding from these organizations here until we get to that point where the lovely VCs are interested to take a first look.
It's a hard truth, but a very important one, because if we don't get some funding, we won't get through the learning phase. Rule number 6, and the last one at least that we prepared, spend time on selecting the right distribution model. A classical rule that you should definitely follow. Now, us being a tech company, this may be an awkward rule or thing to post anyhow, because right, if you're a tech company, you're going to use a mobile app, right, to reach your customers. And that's true, and that's wrong at the same time. Yes, you need an app to reach, right, to interact with your customers, but it doesn't mean that an app is the way how they get to know about you, how they get to learn more about you, how they're going to trust you, or how you will support them when something goes wrong. I know of online banks that open branches where you can do absolutely nothing except ordering a cup of coffee, just to give their clients the perception that the bank is real. So even if you distribute digitally, it doesn't mean that you can do away with any investments physically. Now for us, this means 2 things. We use the cooperatives as our agents. As you can see, actually here, this is a lady from the cooperative, because they're used to talk to farmers. In fact, they talk to farmers every day, and they're a trusted source of farmers because that's where farmers get their income from. So they play a very important role for us in terms of educating the farmers, reaching the farmers, and building trust. But we can't rely upon that alone, so we also actually made very big investments in having our own impact team that is there on the ground to train, to assist, and to just build trust, to show the people this is real. I think that's somewhere up there in the cloud that they can't exactly comprehend. Now, of course, we are a tech company, and we will distribute our loans digitally, so we won't disappoint you. This is arguably, at least to our knowledge, the first prototype of a WhatsApp-based loan origination system in Uganda that we are currently developing. So this is, I think, a public premiere. So a farmer can use WhatsApp to reach us. So the farmer will just say hi. We just prompt an auto queue, saying, you know, what do you want? Do you want to request for a loan? Want to buy goods on credit, or you just want to check your loan limit. The farmer types a number 1, and then we come back. All right, good. You can lend up to 250,000 shillings. How much do you want to lend? The farmer types it in. I want to lend 200,000 shillings. Nice amount. And we just confirm. And then we say you pick your repayment, 1 month, 2 months, 3 months. Again, the farmer picks a repayment period. And then we prompt the last message. This is the deal. Do you want it? Yes or no? And there we go. The farmer accepts it and it's done. So yes, distribution is done digitally, and yes, the mobile phone is the key to the future. But it doesn't mean that you shouldn't think about your distribution model in a bit of a broader context so that you support it properly with underground resources. Very briefly, we have been on this journey for quite a while, and we're now in a very interesting place. We are launching our second MVP, which is a minimal viable product, very soon, next month. We have shown you a number of lessons, and as I already said, we have made our mistakes, hence the need for an MVP number 2. Because very honestly, the MVP number 1 had some good ideas, but I didn't quite cut it. So we're launching one in December, and you can rest assured number 3 will probably come only a few months afterwards, and onwards and onwards. In terms of lending, we're very busy with that as well. We're currently waiting to finalize our license, and we hope to start giving out the first loans to farmers in Q1. So far, we've only tried this in our office with some lucky employees. But it's a very controlled environment, so it's not the same thing. And lastly, we hope to roll this out on a larger scale later next year. We're currently piloting with a number of cooperatives close to Kampala, which means that our team can visit there very frequently. We can send our developers there, so we can do our learning. And once we feel that our product is solid enough, we can roll out and also reach farmers that are a bit farther away from home. This is it from our side. We hope you enjoyed it, and hopefully can take a few of these lessons on board so you don't make the same mistakes that we did. And I now would like to open the floor for questions, if there are any.
No comments.